In this latest section of our How to Trade Forex course, we're going to start looking at currency pairs, what they actually are and how traders try and profit. Hello, I'm David Jones from Capital.com, and this is the next step in our complete course on how to trade Forex. So we're now today going to look at some of the basics, some of the real basics. What is a foreign exchange pair? What does it mean? What are the price movements? How do we talk about price movements? And at a really basic level, how do traders try and profit? So now we're just really setting the scene for what the foreign exchange markets are all about. So let's get started. So let's take a look at what some typical currency quotes look like. So we've got four here. Pound US dollar 1.3200, Euro US dollar 1.1400, Euro pound, Euro sterling 0.8800, and dollar Japanese yen 110.00. What does this actually mean? Let's go back. Pound US dollar. So 1.32. This means that £1 would buy 1.32 US dollars. And of course we can work our way down. At the time of recording, Euro dollar was 1.14. 1 euro would buy $1.14. Euro sterling, so the euro was worth 0.88 of £1, so 88 pence. And finally, this one here, dollar Japanese yen 110. $1 would buy 110 Japanese yen. And of course, these rates will fluctuate throughout the trading day, and currencies are a 24-hour market. Let's take a look at price changes. So if you've heard price changes talked about in currency markets, you've probably heard the market moved 100 points or 100 pips, so they're pretty interchangeable, this terminology. Let's walk through and see what we mean. So let's take pound US dollar. Starts the day at 132. So 1.3200 is how it's usually quoted. So a pound is worth $1.32. By the end of the day, the exchange rate has traded up to 1.3300. So now a pound is worth $1.33. So the exchange rate change is a rise of 0.0100. And I've got that number clearly by taking away where it ended the day, 1.33, taking away from where it started the day, 1.32. So we've seen a change of 0.0100. But in Forex terminology, that's a 100-point move. Okay, so it is, of course, a 0.0100 move. But when we're talking about foreign exchange, we look at how many decimal places it's quoted to. Pound US dollar is quoted to 4 decimal places traditionally. So this move here is a 100-point move. Let's take a look at one more. Dollar yen starts the day at 110. So $1 buys you 110 Japanese yen, finishes the day at 109.50. So the dollar has dropped against the yen. The change in this example from 110 to 109.50 is 0.50. But again, in currency trading terminology, we call that a 50-point or 50 pip move. Because dollar yen is quoted to 2 decimal places, 0.50 is referred to as a 50-point move. And let's take a look. How do traders profit from this? Well, if our trader buys £10,000 when pound US dollar is 132, a trader is speculating that the pound will go up, but at the same time, the dollar will fall against the pound. So when we're buying, it's the first quoted currency we're speculating is going to rise. So if we're buying pound US dollar, we think the pound is going to rise and the US dollar is going to fall. So if the trade ends up being closed above 132, there's going to be a profit because we bought at 132. If we close this trade, pound US dollar, below 132, there will be a loss. Margin trading using leverage means the trader only has to initially deposit, for this example of £10,000 pound US dollar, around £333 to open this trade. But this makes a lot more sense if I show you on the platform. So let's jump on the trading platform. So here's the trading platform at Capital.com. I've set up an order ticket here just to walk through the numbers we just looked at. So in terms of size, £10,000, that's the size of this trade I'm setting up. So to do that trade, the margin required is £334. So I could have a £10,000 position and only tie up £334 in this example. We will talk about margin and leverage, the risks and the rewards in a later video in this course. So what I've put in here, buy when the price is 132, and then just to scroll down, close when the price hits 133. So you can see it shows my profit. If I bought at 132, £10,000 US dollar, and closed when the price hit 133, in this example, a 100-point move in my favor for 10,000 GBP USD would deliver a profit of £76. So you can see it down there. And of course, the other way of looking at it, if I bought at 132 and came out 100 points lower, then I'd lose £76. Okay, so it gives us an idea of our potential risk and our reward. And for this trade, we tie up £334 to control that £10,000 position. So that's how currency traders will try and profit from the moves, and how you can in the various markets that we're going to look at during this course. So we've looked at how foreign exchange pairs are made up, and how we classify the movements, and how traders will try and profit. You know, it is possible to have significant profits during the day, and of course the risk of significant losses because of this leverage factor, trading on margin. We will talk about that in a few episodes time, the risks and the rewards and how to manage it. Next time around, we're going to take a look at the events that actually move foreign exchange markets, whether it's news announcements, government numbers, market sentiment, surprises, all of this sort of stuff. So we'll look at what we need to be watching when we're trading foreign exchange. We'll start wrapping up this lesson just here. But first of all, before we finish off, don't forget to never miss out on any of the content when we load up new lessons. Just make sure you're subscribed by clicking on the subscribe button and the alarm bell notification thing. If you click on that, you get a push off YouTube whenever we've put up new content. To follow along when I'm using the trading platform, we're going to be using the trading platform a whole lot more when we start looking at technical analysis and trading techniques. So if you don't have an account with us, you can open an account by either going to Capital.com and opening an account online, or if you download the Capital.com app from wherever you get your apps from, you can open an account through that. But for this next step into the world of trading Forex, we'll wrap things up there. So until next time, from me, David Jones, and Capital.com, good luck with your trading.